Hello guys, and welcome back again to my channel. Angie here, and thanks a lot for stopping by. To my new subscribers, you are warmly welcome, and thanks a lot for subscribing. Today's video, I'm going to be talking to you about the Forex chart, or introducing you basically to the Forex chart, how the Forex market looks like, or whatever goes on there. And so this is going to be for newbies or for people who are probably interested in the Forex market or would one day want to trade but don't have any idea about what goes on there or about whatever happens there. Yeah. So if you're in this group of people, just stick and stay. And so the green and red bars you are seeing on your screens are called the candlesticks, or the Japanese candlesticks. And these are literally the visual representation of whatever is going on behind, the screens. We all know that Forex trading is the selling and buying of currencies. And so whatever people are doing behind the scenes or behind their computers, whatever trades they are executing, whatever buy or sell order they are executing, is literally represented on these screens as these candlesticks or as these bars. We can have them represented as bar charts or even line charts, but mostly these are the candlesticks. The candlesticks are what people use, or majority of traders use to trade. Yeah, so I'm going to be taking you through the anatomy of the candlesticks very soon, and so stay tuned for that. And so these are the Japanese candlesticks, and you can customize your candlesticks to whatever colors you want on your apps, but majority of people have them in green and red. And so when you see the green candlesticks, it means that it's a bullish candlesticks, or the name given to it is a bullish candlestick, which means that buyers are in control of the market at any point in time. It's either the buyers are in control of the market or the sellers are in control of the market. So if you see a lot of the green candlesticks at a point in time or in the market, then it means that the buyers are in control of the market. And you can also see the bulls are in control of the market. Same goes with the red candlesticks. The red candlestick is called the bearish candlestick. And whenever you see a lot of these candlesticks at a point in time in the market or on your charts or on your screen, it means that the sellers are in control, of the bears are in control of the market. Now let's move to the features of these candlesticks. Now let's come to the bullish candlestick, and I would like you to take notice of where I've written the numbers number 1 to number 2 to number 3 to number 4. And so we have number 1 as open, and that is where price opened at, and it came back down to the low where number 2 is, and went all the way up to number 3, that is the high, and closed as number 4, that is where the close is. And so between the open and the close is the real body. And then the lowest point where the price went after it opened is called the lower shadow of the wick. And the highest point the price went before it came down to close is called the upper shadow or the upper wick. Mostly you might hear wicks. Yeah, just wicks. But it's also called the shadow. Now, moving on to the bearish candlestick, you can see where number 1 is the open. Don't worry, I'll show you an illustration later in the video. But where the number 1 is as the open, that is where price opened at, and went up to where number 2 is. Most likely went up to where number 2 is, where the upper shadow is or the upper wick is, and came back down all the way to where number 3 is, the lower shadow is, and came to close at where number 4 is. There are also times where the open and the close are at the same price or at the same place, and that is also another type of candlestick called the doji candlestick, which I'll be explaining in my next videos. But it's also good to notice that where one candlestick closes, that's where the other opens. Yeah, and Yeah, and that's basically what the anatomy of the candlesticks are. In my next slide, I'm going to be showing you the type of trends that one can identify in the market. So the first thing you need to look at or identify when you enter into the market is where the trend of the market is heading to. Yeah, so there are actually three types of trends. It's either the market is on an uptrend or a downtrend or a sideways trend. There is also a choppy trend, which is almost like the sideways trend, but it's choppy. It's not really good for traders to trade in that type of market. But you can trade in an uptrend or in a downtrend or in the sideways trend. So by mere looking at the chart or mere looking at the screen, you can identify where the market is heading to or the direction of the market. And so if you see that it's going up, it's in an uptrend. And for theory's sake, we say that the trend is making series of highs. So for an uptrend, we say it's making higher highs and higher lows. Yeah, so when it goes up, it's higher high, as you can see on the screen. When it comes down, the point where it gets to is called the higher low. So if there's something that is going to confuse you, one thing I did is that I put the high in my head. So if it's an uptrend, anything I say must start with a high. So a higher high to a higher low, to a higher high, to a higher low, to a higher high, to a higher low. Between a higher high and a higher low is a retracement or a correction, and I'll be showing you that in my next slide. So it goes the same for the downtrend. So when the market is on the downtrend, which I earlier said that you can just look at it with your mere eyes and you can see the direction it's going to, we say that the market is making series of lows. So lower high to lower low to lower high to lower low to lower high. And in between the lower high to the lower low is called a retracement or a correction. There's nothing like that for the sideways trend, since obviously the trend is going sideways, but you can trade in any of these directions. Yeah, but it's mostly advised that as a new trader or as a beginner, you trade in the direction of the trend. So that's what there's the saying that the trend is your friend. So whenever you get into the market and you see that the market is making series of higher highs and higher lows, that is, it's in an uptrend, then you should be looking to take buys only. So you are only buying and you don't sell it. If you sell it, you might be selling a retracement and you don't know where the retracement is going to get to before it takes another higher high, so it might not be profitable for you. So you only look to trade only in the direction of the trend, which is buying it if it is in an uptrend and selling it if it's in a downtrend. So all your trades will be buys in an uptrend and sells in a downtrend. For the sideways trend, is best if you can ignore it if you don't want to trade it. But if you feel you are good enough to trade it, then of course you can trade it, but you need to be careful when trading such trends. To be on the safer side, you should be looking for uptrends and low trend, like downtrends to trade. Yeah. And also for the choppy market, you need to stay away from that market totally. You don't have to take any trade when you see that there's no direction in the trend. Like there's no direction. You just have to leave the charts when you are exposed to such type of trade. I'll be showing you in my next slide, so stay tuned. Guys, you should know that the trends are not always this perfect. It's actually not a perfect trend, and I'll show you this in the next slide. But then you just have to know that it's making series of highs and lows. Yeah. So as you can see, this trend is an uptrend, as the arrow is showing. So we can see that by just looking at it, we can see that the market is going up or the candlesticks are going up. And it doesn't mean that you wouldn't see some red candlesticks inside, even though it is going up and buyers are in control of the market. You might see red candlesticks here and there, but overall you can see that it is going up. And mostly where the candlesticks are, that is where the retracement is. So as indicated there, that's the retracement or the correction. So generally you would want to look at where the trend is and take your trade in direction of the trend whenever you enter into the market. Yeah. So as you can see, it's making series of higher highs, higher lows, higher highs, higher lows, and in between the higher highs and the higher lows is the retracement or the correction. For me, I would want to interpret the retracement or the correction as a stage where the buyers rest or take their profit before they take other orders to the upside. Yeah, so that is it. You'd want to look at where the retracement ends, and based on one or two candlestick pattern formation, you'd want to enter your trade there. I'll be teaching the candlestick pattern formation in my next video, so yeah, stay tuned for that. But in all, you should look to trade in the direction of a trend so that it can be more profitable for you. So the next slide would be the downtrend. As you can see, just by looking at it, you can see that the market is moving down as indicated by the arrow. And here we are saying the market is making series of lows. So lower high, lower low, lower high, lower low. And as I said, this is just for theory's sake, but if there's something that is going to confuse you, you just have to have it in mind that once it's in a downtrend, everything I say or whatever I say should start with a low. So lower high, lower low, lower high, lower low. And in between the lower highs and the lower lows are the retracements. Yes, so the retracements, most of the retracements are characterized by the bullish candlesticks or the green candlesticks. So you should also be looking to trade to sell in a downtrend rather than to buy in order to be profitable in the market. I hope you get it. But for this, with a lot of chat time, a lot of looking at the charts, a lot of reading here and there, you'll be able to get a hang of it. And this is just going to be something basic that you wouldn't even need as you go on in your trading career. Yeah, so it's like learning a language. This is just like an ABCD. And yeah, very soon you'll be needing these ABCDs to form sentences and all that. So this is just the basic, and once you get a hang of it, you wouldn't be confused, or you just go with the flow and everything will be fine. So yeah, this is a downtrend as indicated by the arrow, and there is the sideways trend in the downtrend. So you can see that where the sideways is indicated, or where I've indicated the sideways, you don't really see the market moving down. You can just see that there are a series of red and green candlesticks here, and it's not really profitable trading in that type of market or that area. So you'd want to wait for it to break down so that you can clearly see the direction before you take a trade. Yeah, so I got this from TradingView. So you can log on to TradingView, you can sign up on TradingView, get your own account for free, and you can start looking at the charts, start identifying the trends in the charts. And with time, this is just going to be something very simple for you to identify. Yeah. My next slide will be the support and resistance levels, which is also a very important aspect of forex trading or analyzing the charts or technical analysis. Yes, so let's get into it. So this is just a duplicate of the downtrend I showed in my earlier slide. Yeah, but you can see that as the market is making these lower highs and lower lows, price will get to a point where it goes back up and get to another point on the same place where price stopped at first and goes up and comes back down and goes up, as I have indicated by the numbers. So you can see where number one is. Price got there and went up, came back to number two, went up, came back to number three, went up, and then came back down and broke that level or extended beyond that level. And so this level is called the support level. Once it breaks it, once price breaks that level, it becomes a resistance level. Do you get it? So when you see where number 4 is, price broke that support level, came back to correct at that same level and came back down. Do you get it? So there's something called break and retest in technical analysis. So once you realize that price has broken a support level and retested or corrected or retraced back to that level where number 4 is, then you should be looking to take a sell. Do you get it? Or as you can see, after it retraced to the number 4 of that, it retested to the number 4 level, it came all the way back down, and you can make a lot from that break and retest. Yeah, so you can see for number 5 and number 6 as well, the price came. Now remember, where the lowest point where the price came at is where we are looking at. That's where the wick ends. So price came all the way down to where number 5 is, went up and came back down to where number 4 is. So if we are to look at it this way, would be looking for a place where price will break that level and retest that support level and come all the way back down. Yeah, and so whenever price breaks a support level and corrects to that level is called the resistance level. When it corrects and it doesn't go back up, or when it corrects and it comes straight back down, that level is called the resistance level. Sometimes there can be false breakouts, which you should also be looking at. But most of the times, when it breaks, it will correct to that level and break back down all the way. Yeah. So the same applies to the resistance level as well. The candlesticks can break to the upside and retest that resistance level. So when it breaks to the upside and retest it, the resistance level now becomes the support level. Do you get it? And now it will have to look for another resistance level on the upside. You would want to also take notice of these levels, which are very important when it comes to technical analysis, so that you can be able to increase your profitability in the market. So guys, this is more like a support and resistance level hack that really helped me. I don't know, I'm sure a lot of people might have known, or yeah, if you're a newbie, you log on to the Daily FX app, or you download the Daily FX app, which is the app I use. This is not a paid promotion. This is something that helped me, that I want to share with you. So you click on it and it brings you to their main page. So after the news feed on the top side, you can see that the pairs are there. You can add the rate, you can add which pairs that you'd want to also look at. But mostly I advise that as a beginner, you should just concentrate on 2 to 3 pairs at most. And so you see the pairs, you click on it. Let's say we are clicking on the GBP USD pair here. and it brings you to this page where when you scroll down you can see the support and resistance level. So if you are somebody who is not really sure of where your support and resistance level is, or where to place your support level and resistance level, then you can come here, click on the app, scroll down, and you see where the support and resistance level is. You can plot your support and resistance level. Yeah. So the green means it's a strong support or resistance level. The orange means it's a moderate support or resistance level. And the red means it's a weak support or resistance level. So this is something small I'd like to show you who don't really know or who are new to the market. Yeah, so guys, that's what I have for you today. And if you're somebody who is interested in learning the Forex market or who is new to the Forex market, I always say that you need to be very resourceful. No single person can teach you all you need to know about the Forex market. You need to do your research, do your due diligence, and practice more often. You can also take a mentor and start your trading career on a good note. Wish you all the best and see you in my next video. My next video would be about candlestick pattern formation. And if you learn something or if you like the video, just give me a like and subscribe. Okay? See you in my next video. Bye.